The Bank of Canada is set to meet on Wednesday next week to announce its latest in series of rate cuts. Employment numbers are down, the real estate market has fallen off the face of the planet, and inflation sits at a manageable 2.5%. But will Tiff Macklem and Company continue to underwhelm us with their timid response to our recovery? This is Sean Humphreys, Kristen Vetrano, I'm Vaughn Zawodzki, and we're mortgage people.
So, Vaughn, do you have statistical data to support the housing market falling off a cliff, or is that just your emotions?
Oh, not the cliff. It's fallen off the face of the entire planet.
Coming in hot. I love it.
Yeah, every market, every economy, every country. That's how it feels.
No one's moving. It's a giant inhale.
Yeah, and you know what? I'm calling out the Bank of Canada today. I'm tired. Me and my friends are all sick of these high interest rates.
Me too.
Tiff Macklem, we need to make a move. Is this the monster rate cut? And I mean 25 basis points and above. So I'm saying, is 50 basis points coming next week? I'm saying, yeah, it's time. They're too slow. Sean?
I'm a decline on that. I think that there's no way that there's a 50 basis point cut next week. And I don't know if you're just goading me into like a you're trying to get me going here, but I think there's no way that happens. I think we've got a quarter point for sure. I think that there's a small chance for 50 basis points, but this Bank of Canada does not want to be seen taking big swings on the rate decline at this point. Does the U.S., if the U.S. does a 50 basis point cut on September 18th, all bets are off the table, but they'd still be catching up to us. I just don't see that happening.
I like how you walked back from no way to I don't really see it. Just always got to be the centrist. You always got to want.
I can say full decline, and yeah, okay. I disagree with you completely.
Okay. I would love to see it. I think, it's interesting. I just saw an article that in Ontario, defaults are way up, and Canada-wide, they're still pre-pandemic, but specifically in Ontario, it's really bad. And when we say really bad, we should qualify. They're still very low. It's just they're, even doubling from very low is still low, but they are, doubling.
So even with inflation, tidy and under control at 2.5 and declining, because we know that it's a lagging indicator.
Mm-hmm.
So a rate cut will not push inflation up. The only thing that's going to push inflation up is more government spending right now, and I think it's probably on hold until post-election. Even with the low inflation, you're not bullish on it?
Me?
No, I think personally that so some of the comparative months in the future will not look as good as what the last couple months have looked like. So I don't think we're continuing to drop like a rock with inflation. I think the next month we could even see it a little bit higher than the 2.5 or 2.67 that we saw the month before. And then everybody's like, well, are we going too slow? Are we not going, should we be slowing down the rate cuts? I think that's the next thing we're talking about. And like a month from now, we're like, well, we don't know anymore. I just don't see it.
The Canada that I know and love seems to always be lagging behind the 8 ball. There's no proactive decisions. We do this in all segments of our government, including healthcare. We don't do preventative anything. It's always after the fact. So surprise me, Tiff. Throw one at us. Let's get ahead of this problem.
That's a feature, not a bug, though. Like, that's exactly how they've designed it. I think that wild swings are for other countries. For Canada, we're much more pragmatic, much more in the middle. Let's make good decisions, but we don't need to be making big swings. I think that there's a time for it. It's just not right now.
It'll be when it's way too late, and then we won't see 50 basis points. It'll be $1.25.
The joys, the party in the streets with a 1.25% interest rate cut, like people will be
At
going
that
nuts.
point, it
Yeah.
won't be a party. Everybody's going to be so underwater by that point from bearing the burden of these high interest rates for so long. It'll be more like quiet relief. Oh,
But
maybe
serious
we'll make it.
delinquency, like what 0.18% of all mortgages are in serious delinquency. That's not a everybody's underwater right now.
Sure,
That's
but I mean, also everybody pays their mortgage before they pay anything else. So if you've got mortgage delinquencies, you've got credit cards creeping up to their limit, you've got lines of credit creeping up to their limit or not being paid. Like mortgages are the thing that people pay. That's their first priority.
Canadians pay their mortgages.
So
for sure.
So, and I think, I'm just taking like another dig at the Ontario government because we're, housing is a problem here. As we know, affordability is a problem here, and now delinquencies are a problem here, and they don't seem to be much of a problem in other places. And I wonder why that is.
Because everybody comes here, right? Like we've got much more demand for our services and our housing in Ontario, and BC is the other one. You could go live somewhere else, but not have the same opportunity for jobs and for culture and for a great. I'm not saying the other places aren't great places to live, but Toronto being the center of the universe, as you know.
Oh yeah.
Yeah, exactly.
We
But
got a few Great Lakes in this province. That's what everybody wants, in my opinion.
yeah, I don't know. Talk to me when like the delinquencies are like twice what they were before the pandemic. I think then that's the time to be considering bigger issues because our bigger moves. Like we're at 0.18%. It's such a small number of mortgages that are underwater right now. I just can't get behind making a big swing.
I agree with Vaughn. I would love to see some visionary progressive thinking in terms of policy. I would love to see like some smart people go, this is what's going to happen if we keep doing this. So we're going to do this instead, as opposed to go, whew, things really got bad. I think it's time to make some small, very close to meaningless measures so that we can try to look like we're helping people.
I mean, historically, when we go back over the last 30 years and we look at these, when we're in a super high rate environment or when the interest rates jump up, in this short period of time, call it 2 years, 4 percentage points that went up. We've seen it fall off a cliff in the past. So it'll be most likely it's going to look like this, creep down 25 basis points until crisis and then big jumps until we get there. So why not just do it now? I don't see what there's safety in this sort of not being too progressive with rate cuts. Who are you going to save face to? If at the end of the day you have to make a 200 basis point cut in one meeting because things have gotten so terrible. Now, we have a new segment. This came about. I was having a conversation with a colleague. And she said to me, I sent you some business a couple of years ago and nothing ever happened with it. And I'm not so sure that I would send you more business. And I said, well, the thing is, they didn't take the application. So when I first got into the mortgage business, a shout out to our colleague, George Klosaurus, who helped mentor me a little bit. And I would always run to George with all the problems that I had. What can I do with this? What kind of rate can I get this client? And he said, did you take the application, Vaughn? I said, oh, not yet. You have to take the mortgage application. You can't get to a number or you can't qualify somebody with sort of bar napkin math in our industry. You could try it if you want, but you'll wind up chasing your tail a lot. So for me, my biggest thing that I need realtors to know is when they send business to a mortgage broker, they need their clients to be prepared to take the application if they want results, if they want a pre-approval or pre-qualification. Without the full application, there's nothing we can do to help. Sean, Kristen, do you have something for this segment of what realtors need to know?
Yeah, who's going? He said Sean first. Do you want to go first?
No, you go ahead, Kristen.
Okay. You think about what you're going to say because we know
Yeah,
you're
I
not
got to make
prepared.
I got to make it up.
Yeah, on the spot.
Yeah, I mean, okay, so part of that whole like the whole process of getting a full application includes documents that the lender is going to ask for. So there's no point in quoting what a budget is for a person's house shopping if we haven't looked at what their income documents are and we don't know where their down payment is coming from and we haven't reviewed credit. It really is it's a mutual benefit to everyone. And it also, from a realtor perspective, they get leads. They want to know if those leads are qualified too. So they send them to a mortgage agent that they trust and that they work with. And that mortgage agent can go, here is the budget. Here are where I see risks. Here are where we're strong. And, go forth and have fun. It weeds out a lot of tire kickers. It weeds out a lot of people who are not serious. If people are willing to give me their job letter, pay stub, T4s, sometimes their T1s and NOAs, and their bank statements, and
Their blood
consent to
work.
check their credit, their blood work. That's literally sometimes we need the birth certificates of their children if we want to use Canada Child Benefit. So like it's a lot. It's an investment for a buyer or a refinancer, but in this case, we're talking about realtors, so a buyer. And if a person is willing to do that, chances are they're not going to have to be sold on buying a house. They want to buy a house.
Yeah, that's right. They're at the starting line instead of still in training camp or whatever. They're ready to run at that point.
Yeah. And the other thing is too is like in terms of what a realtor needs to know, I would say any realtor needs to have a mortgage partner. And I think that they're told you should give 3 mortgage names to your borrowers and let them, or to your buyers and let
Hey,
them
we have 3 right
decide.
here.
We have 3 right here. You can give them our names. But I think like having a person that is your go-to person that you trust and you know how the flow is going to go, and that they're going to follow up with your clients as well. Like I have clients who come to me as referred from realtors, and they get sleepy and they stop responding for a while, and then I come back and go, hey, I spoke to them and they're, we're now looking at this. We're now talking about a co-borrower and now things have opened back up again. So there's another way of like progressing things for you because we are also touching in with the client and always sending them back to you so that we have like a symbiotic relationship. The most important thing always is communication to make sure that the process is as flawless as possible. And if you know who you're working with and you have like a trusted team, that communication is always going to be flowing.
All right. So we've got take the application. We've got great communication. Mr. Humphreys, what do you have for us that realtors need to know?
I agree with everything you just said, Kristen and Vaughn. I think that one tweak that I would say is that I can often get a sense of somebody's viability to buy something within the first 15 minutes of a conversation, just by asking, hey, how do you make your money? What kind of down payment you have? I don't need them to send me all their documents, fill out a full application to get a sense of, is this a good idea for this person? And then is that a good person for the realtor to be able to work with that prospective buyer? And then if they are serious, let's put together the application, let's gather the documents and move on to step 2. But I want to filter out as many of those tire kickers or people that aren't qualified as possible in that first 15-minute conversation. And then I'm happy to invest more work and I'm happy to get them qualified and pre-approved. And then that person then becomes a good person for that realtor to work with. And I think one thing that I'll mention, I think that makes us different from the banks is that our ability to help people win business or win the deal. I'm often got my thumb on a deal where I'm hearing from the realtor or the client, we're thinking about offering on this property. Can we just have a quick 10-minute conversation about what the budget's going to be, what the payments are going to look like, and being that person who can also kind of be the sidekick to the Robin to the Batman of the real estate agent to help that deal move forward. gives people confidence. Making an offer on your first purchase is very, very stressful. It is, they don't know what they're going to do. And having somebody else in your corner to say, hey, this is what it's going to look like. Here's what your finances are. Yes, you're going to get approved. Just allows realtors to win more business because they're spending less time making offers that they won't win.
Yeah.
So that brings up a good question that I have for both of you as well. In whose responsibility is it to discuss closing costs? Nobody wants to talk about it. Do you put that on your plate, or do you put that back on the real estate agent's
I
plate?
certainly want to talk about it. I want to talk about everything. Anything that has ever come up as a stressor close to closing for my client, I talk to them as early as possible about. So closing costs are mentioned. I think both should mention it. I think like realtors should talk to them, and I think their mortgage agent should talk
Because
to them.
there's some information out there that and I don't know where it comes from, but I come up to against this a lot of times where the client says the closing cost comes out of my down payment, right? And it's like, oh no, it's not. If you have total of 80K all in savings, that's
You
not
don't have
80K
an
towards
80K
your
down
down. You don't have an 80K down payment.
Mm-hmm.
Yeah, I'm talking about that on the first call. The first 5 minutes of our conversation, I'm already hitting on how much down payment do you have? Does that include closing costs? Because that then reduces what your budget is going to be.
Sure.
So I'm talking about it right up front.
I mean, that's really the nitty gritty. It's not all, fancy photos of golfing on Instagram and really awesome bow ties in this industry. We do have to do some. We do have to do some hard work here.
You forgot pictures and waterfalls too.
Okay, that's where I come in. I'm like, I don't golf, I don't wear ties. What kind of mortgage agent?
Yeah.
Oh, a nature-loving mortgage agent.
Yeah, there you go.
Yeah, I think this is another reason why you need a mortgage agent is because there's like literally a number of topics. I am always trying to template the conversations I need to have with clients and the information that I want to give to clients. And when I start jotting down topics, I just have to quit. I'm like, there's too many. It's overwhelming, the number of times you have to revisit certain things as well. So this like constant communication is so necessary because you're like, now at this stage you want to be thinking about this and etc. Like I have realtors that ask me a lot about closing costs that really want to help their clients budget the purchase and who are messaging me, what can we offer on this property so that their monthly payment is X? And sometimes I'm like, wow, this person really does a lot of extra work for their client. It's so great that they're so invested. And other times I think this person is doing more work than they need to. Like they should just say, call Kristen, she knows, or you know what I mean? Like they don't have to figure all of that stuff out if they have someone to really lean on.
Yeah. Well, especially when, property tax, and if you're doing a condo purchase, you may have to, you really want to be in front of your client all the time because every unit's got a different strata fee. Every building has different property tax. So all of that stuff, especially when people are right up against their budget, which in this market, people are pretty much right up against their budget.
Condo, nobody is buying a cheaper condo than they can afford because they're so small. You're like, whatever you can afford, you're buying the most expensive, like you're buying the most expensive one that you could possibly qualify for because you are trying not to live in a tiny shoebox.
Now, any final comments on what realtors need to know before we move to a little approved decline?
Oh, so many things, but I'm looking forward to this as an ongoing conversation.
Yeah, great idea. I got lots to add, but I think that's a good summary for now.
Tune in, realtors, for more tips.
This one comes from, sorry, I finished your sentence there with a brand new sentence of my own. This comes from that post in I Love Mortgage Brokering, which is a group that we all belong to, and something that sort of indicated that there may be mortgage brokers out there that could be potentially forging documents. And it made me think, because we read about it every now and then. This is not, a widespread problem across the industry, but there's certain bad players in the industry. And sometimes when they get caught, they get fined and the brokerage gets fined. So my question is, approve or decline? If you're caught forging documents, is a fine sufficient?
Well, they lose their license too, don't they?
They should definitely lose their license.
Yeah, I mean, we just went over all of this with the private mortgage, but forging documents. Yeah, I mean, a fine is
Fine.
sufficient. I mean, what more can you do?
It's not fine.
What's that?
It's
A
not
fine is
fine.
fine.
Fine is not fine. Yeah, I mean, they can't be practicing in mortgages anymore, of course. And what more can you do than a fine when you want to send them to jail?
Could you, potentially shut that entire brokerage down? If you're the head broker, what is your responsibility? You'd think you probably know.
I think there's too many people turning a blind eye towards it. I think I'm a decline. I think that it needs to be more. I think that there needs to be a culture change where if somebody spots it, it needs to be reported. And I think that the problem is that there's everybody involved in the process has money in the game. And as soon as somebody's calling out fraud, then they're not making money. And where we are right now, where business is down across the industry, I see it being a bigger problem because people are more desperate for. So I think that the penalty needs to be swift, it needs to be large, and it needs to occur as often as possible. It should be every week we should be hearing about somebody getting fined, because
Yeah,
if that's happening,
clean it up. I have zero leniency to anybody who is outright cheating like that. It is not a help to your industry. It is not a help to your client. It's not a help to your financial institution that you're placing that mortgage with. It should be swift and it should be harsh.
Do you think that it happens more in the private space than conventionally? Like, I would think that because they don't have the same kind of underwriting facility to be scrutinizing things.
well, but they're I think with a private mortgage, like which documents are being fraudulent, right? Like if they're already qualified, like income is not as much of an issue. It's about how much you're borrowing based on the appraised value of the property. I think they put window dressing around it, but it's ultimately property, the value, the location, and how much of the property they're willing to have a mortgage on. I think that is a problem.
Still want to make sure that, in a lot of cases, they still want to make sure that payments can be made, etc. I just feel like there's such a huge mechanism within conventional lending. Maybe this is just naivete, but it shocks me that people would forge documents. And I know that like every year we have to relicense, and that's all they talk about is how to avoid fraud and what the
I think
implications are.
I think it's a problem on the A side of our business with banks and certainly some B lenders, I'm sure. But I think the real reward is getting approved for an A mortgage at a low rate, and forging documents to get that is the whole point of that. They
Sure.
probably could qualify for an
Private.
alternative lender where there's private or there's a fee to be paid, but they're willing to get that lower interest rate to be qualified at the bank. And the way I say it is like, borrowers who have fake documents who are qualifying for more than they should, they're increasing demand because they shouldn't be offering on those properties versus somebody who is purchasing a property with legitimate income, with legitimately making it happen. Obviously, you can't forge down payment because you have to come up with the money, but that income, they shouldn't be participating there, and that's forcing up prices and and essentially making it more expensive for everybody else. It's like going to the Olympics and having a performance enhancing drugs and winning the gold medal versus somebody who was clean and competing and loses out on that gold medal because somebody else cheated. I don't think there's any room for it. It's a big issue.
Straight to jail.
Straight to jail.
So it's a good sort of lead in to my next approve or decline. And this one, so to preface all this, we just finished our anti-money laundering course that we are required to take. The three of us took it together and aced the test. But we learned about one of the major banks in Canada, Canada's biggest mortgage lending bank. They own 24% of the mortgage market, and their book of mortgage business is at 300 billion. Now, they were caught being non-compliant, and I don't know how severe the non-compliance was, but they were caught being non-compliant, and they were fined $9 million, which represents 3 basis points of their book of business. So 3 cents on the dollar they had to pay in a fine. Does the punishment fit the crime? Is that enough? Is that enough to deter them from having relaxed anti-money laundering policy practices?
I'm gonna send this deal back because I need more information. So like my question is not as much how much of the book of business, but how much of their like profits does that represent? Because to some degree you can't like crush a bank or else the economy is gonna go like down the tube or whatever. But I would say certainly we have heard stories of banks doing unbelievable things that are so outside the guidelines that they publish. And even in an insured space where they basically insure themselves because I think there's some banks that don't even claim defaults. If there are defaults, they just pay for them. So they kind of can do more. And that seems counter to what's legal. So yeah, I think many people should be punished. People should be probably fired and not allowed to do. I mean,
let me just make it clear to anybody who's watching this, our tens of viewers out there, that anti-money laundering policy is not the bank did not get charged for fraud. There's no mortgage fraud, but like an anti-money laundering situation might be something like somebody new to Canada takes out a mortgage, makes 3 payments in a row, and then all of a sudden pays off the entire balance of their mortgage. So it's suspicious activity that when you did that mortgage qualifying process, you weren't aware that they had $1 million or 1.5 million sitting in their bank account because, potentially they didn't. So that money potentially came in from another country. It's suspicious. It doesn't indicate that there is fraud. So maybe $9 million is a sufficient fine. Sean?
I think a decline. I liked a lot of Kristen's points. I think there needs to be cultural change at the banks that are having these that are getting these fines. I think you mentioned firing of executives. I think that needs to start right at the top. So if the problem is that senior executives, and I don't know people's performance packages, but let's assume that they get paid based on the performance of the stock or performance of the bank. They will, they're seen either in a good light and they're up for promotion, or they get financially compensated for it. So I think 9 million is probably an appropriate fine, but I think that it needs to be backed up with other cultural changes within the bank. Should have an automatic review of practices within the bank from a third party. I think it comes back to the same conversation with the fraudulent behavior before in an individual basis. When people all have a financial stake in the performance of either the bank or their own mortgage, getting those mortgages or getting multiple number of mortgages or whatever the financial product is, that's where there's going to be fraud, and that's where there's going to be people turning a blind eye. I don't see a way around it when, as a culture, the personality of, or the the drive to make more money individually is just too strong. And many people will turn a blind eye.
It's what makes our capitalist market great, but it also opens up some vulnerabilities when you incentivize or over incentivize certain behaviors.
Perfect way to put it.
I don't know if that's what makes capitalism great, but anyway. I will say I agree with the second part of that statement.
Well, do we have any other topics to cover today?
I think
I think it's pretty good.
we're at, I was going to bring up something, but I'm going to sidebar it for another time because it's 30 minutes and I just think 30 minutes is a perfect podcast length.
Let's talk about the stress test next week. That was one thing I wanted to get to.
Should we?
But we'll do that next week.
Well, I've had a great time today. Next week, we're live Wednesday to do the Bank of Canada announcement. I've called out Tiff. I expect 50 basis points.
I want 52. I want 50, but I'm willing to settle for 20.
We know they're not going to, though. Fingers crossed.
Mm-hmm.
Have a great week.